We've got dollar yen around the 112 level. Overnight, any surprises from the BOJ as far as you're concerned?
No, we fully expected the BOJ to push back on their timing of their inflation target. So this is the sixth time that they've been forced to do that. So we're now talking, well, they are now talking about the end of fiscal year 19, which actually is, of course, March 2020. So that's almost another 3 years before they're likely to meet their inflation target. And consequently, because of the theme and the tone of Mr. Kuroda's press briefing, it's clear that unlike most other central banks, perhaps excluding the Bank of England, who are thinking about more hawkish tendencies, the Bank of Japan stands almost in isolation. So policy is going to remain very much on the easy wavelength through until at the very least Mr. Kuroda's tenure ends at the BOJ, and that's of course in April 2018.
Okay, just looking at the intraday chart of dollar yen, you can see that after yesterday's brief dive towards 111.50, we've recovered quite quickly. Got a bit of a roadblock there at 112.40, but after that up to 112.80 for people who are keen on trying to follow the Bank of Japan's.
Well, indeed. I mean, those are exactly the levels that I pointed to in our morning meeting this morning. That after the being a little wary of going into the BOJ, the fact that we haven't seen any surprises does suggest that, irrespective of the dollar leg of the equation, which looks a little challenged on its own, but dollar yen does look as though it's going to be moving back higher, and maybe it's an opportunity to look at some of the other crosses. Maybe euro yen is a better way to play it.